And welcome to Inside India. I'm JP Ong, and here are your headlines. Asian markets are largely mixed so far in today's session after the Fed delivered its third straight rate cut as expected. But it was its most divisive vote, that is, in 6 years. The Indigo fallout continues, with the carrier cutting capacity and reducing its revenue forecast, bringing in external experts as well to dig into the chaos that erupted just last week. And big tech continues to pile into India. Amazon, following in Microsoft's footsteps, earmarking about $35 billion in investments for India over the next 5 years. India's IT secretary telling CNBC there's enough space for everyone.
Geopolitics today has changed in such a way that you need alternate supply chains. You need the diversification of supply chains to actually take place, because that's what adds to resilience.
Good morning and welcome to the broadcast. Let's take a quick look at how Asian markets are doing this Thursday morning. As mentioned, mixed to the downside, with market sentiment seemingly tested by the Federal Reserve's policy decision, where they did cut rates as expected. But again, perhaps hints of fewer cuts in the future, perhaps just tempering sentiment from markets from Sydney to Shanghai. We're seeing the Nikkei 225 today falling by about 0.6% in today's session. The Hang Seng holding its nose above water, up by about 0.2%. Meanwhile, you're seeing markets in Shanghai, as you mentioned, in the red by about 0.25%, while the ASX 200 holding on to very meager gains, trading about 0.5% in the green. And as you mentioned, it's the Fed day today, the last decision of the year. And as mentioned, the Fed slashed rates by about 25 basis points, as largely expected. And that brings rates to a 3-year low. But the Federal Reserve also signaled it's likely pausing from here on. U.S. Treasury yields right now trending just a little bit lower, and we're seeing 10-year yields at least edging down to about 4.139%. The 2-year note also down by about 3.54%. That's the 2-year yield, that is, edging downwards. So a little bit of a give back or easing in terms of the U.S. yield curve across multiple tenors. But again, the prospect that perhaps rate cuts might be taking a break for the time being, might be just tempering and just tempering some of the sentiment we're seeing in equity markets earlier on. As mentioned, the central bank was also deeply divided, with 3 officials dissenting. And new projections are showing policymakers expect just 1 rate cut in 2026. Early hours still, but U.S. futures currently forecasting a lower start in today's session. The implied open seeing the S&P 500 set to open potentially about 0.7% in the red, and the Nasdaq, the tech-heavy and sensitive Nasdaq, also foreshadowed to perhaps close open, that is, more than 1% lower in today's session, or at least in the Thursday session when markets in Wall Street open later on tonight. A quick check on the currency space as well as we wait for the FX board here. We're seeing the dollar index also easing and softening to about 98.62, while the Japanese yen getting a little bit of a gain from that softer dollar, and also expectations that the BOJ will hike rates when they meet next Friday on December 19. The euro also flexing just a tad against the US dollar at about 1.16 versus the greenback. CNBC's Steve Leisman also has the detailed breakdown of the Fed's latest move. Take a listen.
The Federal Reserve following through on an expected hawkish rate cut, reducing rates by 0.25 point to a new range of 3.5% to 3.75%, but signaling it might be done cutting, at least for now. It did appear to buoy markets with a more aggressive policy than expected for its balance sheet. On rates, however, the statement used language that it had used in the past to signal a pause ahead, and Fed Chair Jay Powell several times said policy is, quote, well positioned.
We now cut a total of 175 basis points, and as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
Fed futures embrace that probability, pricing in just a 24% chance of a rate cut in January, 44% in March, and then a greater chance as the year goes on, with an 80% probability in June when a new Fed chair comes into office. The vote count for this meeting was 9 for cutting, 2 against cutting, and 1 for cutting 50 basis points. The first time since 2019 there have been 3 dissents. But the dot plotter of the forecast of future rates was somewhat more hawkish, with 6 officials wanting no change in the funds rate at this meeting and 7 wanting no change for next year. The median, however, came in at 1 for next year and 1 in 2027. More dovish, however, was the balance sheet outlook. The Fed announced new purchases beginning December 12th for its balance sheet sooner than the market expected, focused on bills, but up to 3-year maturities. A total of $40 billion will be bought in the first several months, also more than expected. Powell insisted this is not new quantitative easing, but the Fed maintaining the size of the balance sheet relative to the economy and providing liquidity during times of strong demand and stress. Whatever it was called, the markets seemed to like it. Steve Leisman, CNBC Business News.
And Indian markets all set to come online in about 40 minutes. And we take a first snapshot of where GIFT Nifty futures are foreshadowing today. And again, 25,946. That is about a 200-point gain from Wednesday's close. But Indian markets are coming off of a fairly challenging start to the last trading month of the year. However, the Nifty is up by almost 9% since the start of 2025. We're seeing the rupee, though, also softening against that already weaker dollar index. The rupee now traded 89.89, and again, concerns that it might challenge or perhaps test that 90 to the greenback level seems to be emerging once again for markets out in Mumbai. Elsewhere in other parts of the markets, shares of e-commerce platform Meesho surged nearly 54% that is on its debut. The company's $604 million IPO drew nearly $28 billion in bids, making it one of the year's most sought-after tech listings. Its blockbuster debut follows successful listings by Grow and PhysicsWallah in what's shaping up to be another record year for India's IPO market. Meesho, which is backed by SoftBank and Peak 15, has carved out a niche in India's crowded online retail market by offering low-cost fashion and lifestyle products as well as zero commissions for sellers. Analysts say that leaves multiple levers for earnings growth that is, especially through advertising. Now, Shrikant Chauhan is the EVP and head of equity research at Kotak Securities. He joins us now on the line to talk about what their outlook is for 2026. It seems to be a rather bullish outlook, whether it's the bull or the bear case or even the base case for Kotak Securities. Shrikant, thank you so much for joining us today. I'll just spell it out here. Based on the recent report from Kotak, I think the forecast for next year is at 29,120 with regards to their base case, and even more upside on the bull case. Can you talk to us what's underlying or underpinning Kotak's rather rosy outlook for the Nifty in the year to come?
Yeah, good morning. So basically, we are taking call on the earning outlook. The earnings is going to improve by the end of calendar year 2026. In the second half of the 2026, we are expecting earnings to do better. And in that case, we can expect a gradual upward activity in the market for at least next 1.5 years. For FY27, we are expecting a growth of nearly 17% on the EPS, and for FY28, our projection is close to 15%. So broadly, we are of the view that this particular rise in the earning and the way the market is saturating at same levels, it will help earnings to show some more strength in the market, because then the multiples will come down, and based on 20 times multiple for FY28 earnings, which is around 1456, we are of the view that market should trade somewhere close to 29,000 levels. The supporting factors are global macros, especially because there we are seeing some mixed sort of activity. They are not as bearish as they were in the past, but domestic macros, certainly that is something which is going to help, because solid macroeconomic fundamentals, if we go through with the few more triggers like fiscal benefits, monetary policy, as well as we can say improving valuations and earning outlook. So these are the important things. Also, if we go through with few more additional measures like the government has taken GST rate cut and income tax cut, I think these are the important things which is going to drive earnings for the market. And that on that basis, we are of the view that we should look for adding more investments at current levels and more on dips.
All right. So basically, one of the biggest reasons why you're optimistic is that earnings are going to improve. And you've actually noted, at least, that earnings actually surprised to the upside, were better than expected in the last fiscal quarter. Shrikant, I'd like to focus in on one other aspect of the market, because while we've seen a late year rally or recovery for Indian equities, it has been noted that foreign investors have remained rather hands off on Indian markets with continued outflows. On the flip side, side. We have domestic investors actually picking up the slack, it seems, in India. What do you think this is mean, or how might this shift perhaps change the dynamics for the markets in India? Are the Indian markets going to be less dependent on foreign funds coming in and perhaps more reliant or resilient, that is, on the back of these growing and rising domestic investor flows coming into the markets?
Yeah, see, this is something which is a very exceptional dynamics that we are seeing in the market. After a very long time, for last 2 years, consistently we are seeing buying from domestic institutions, and the flows are intact. And in fact, most of the time we have seen rise in the flows. At the same time, if we see the outflows from the Asian markets or from emerging markets is like consistent, and the way the structure of the currency, I'm going to say the dollar is at 100, our currency is quoting at 90, it is weakening on a month-on-month basis. I think because of that, we cannot expect immediate reversal of FPI investments. But yes, domestic confidence level is very high, and that's the reason at present, at least, we don't need any specific support from the foreign institutions to invest into it. But yes, if the earnings starts improving, I'm very much sure that the flows will start reversing from, let's say, developed markets to emerging markets, especially for Indian markets.
All right, sure. So Shrikant, let's go into some of the sectors that Kotak Securities is identifying as perhaps ones to watch next year. And there's two that really caught my eye: banks and financial services on one hand, and IT technology services as well. Talk to us about why these are two of your sectors to watch in the year to come.
Yes, so we are bullish on BFSI, as well as we also like IT stocks, IT sector, in terms of their valuation. So very first, if we go through with the BFSI sector, then for BFSI sector, the logic is that all these private banks as well as PSU banks, they are available at decent valuations. If we consider their a particular loan growth, then there we are seeing loan growth in almost all the segments, including corporates, individual, and MSME. If we go through with the margins, then most of the banks have digested the increase of 125 basis point rise in the 125 basis point cut in the interest rates. So that is something which is not going to impact on the margins in the near future. I think that has market has digested, and because of that, we can expect growth on the margin side. And the last one is that the asset quality. So in the near term, we are not expecting any issues related to credit cost issues. So broadly, I think if we consider the asset quality, if we consider the margins and their valuations, we should be like, I'm going to say the market should give more preference to the BFSI sector. For IT, especially, we are talking about their valuations, because all these IT companies are available at their lowest valuations of last 10 years. So they are available at reasonable levels, and these are all IT services companies. So if there is anything related to, let's say, AI in the US markets or in the world markets, then that particular will support IT services in for Indian companies.
Yeah, Shrikant, let's talk about the year that was for Indian markets. Now, while the Nifty's up by 8.9%, it had a bit of a shaky start and looks more somber in terms of gains as compared to the last couple of years. And many analysts have actually said that it's not so much that the quality of Indian companies or markets have degraded. It's more that perhaps the valuations got a little too high, and perhaps there was a need to normalize these, which it seems to have done over the last 12 months. And I ask that because there are other markets that might be facing corrections, particularly global markets, and concerns about valuations perhaps needing to be rationalized with regards to the tech boom we're seeing out in the U.S. markets. Do you think then that perhaps that we might be in for a bit of a re-rationalization of valuations with regards to tech stocks? And if so, could that actually provide a challenge, that is, for Indian markets and perhaps that bullish case that Kotak Securities is outlining?
So yes, in the near term, there is a possibility that if we see furthermore upside for AI-related stocks or AI-related businesses, then it will have some impact on the companies which have like more into AI related, I'm going to say IT services related businesses. But in the near term, or if we take the view of next 12 months, then the overall performance of the of the IT sector is clearly depends upon the valuations, and currently they are cheap. Yes, there is of course pressure is coming, but if there is any particular anti-AI sort of trend emerges in the market, then in that case, all these IT companies can do well. Also, if we consider the valuation for our markets, then our markets are trading at 20 times to the trailing 12 months. But if we consider the overall outlook of the market for next 12 to 24 months, then there we are of the view that earnings should do well, and that should support the entire market.
All right, so perhaps fingers crossed that indeed there is more upside and better days to come for the Indian markets in 2026. Shrikant Chauhan, Head of Equity Research at Kotak Securities, we appreciate the time and appreciate you laying out why you think the next year will be better for Indian stocks. And we're tracking some big investments from big tech into India this week. Amazon yesterday announcing it will invest $35 billion over the next 5 years to boost its AI and export capabilities. The e-commerce giant has invested about $40 billion in India since 2010. It follows Microsoft's announcement earlier this week to invest $17.5 billion into developing AI in India, its largest ever investment in Asia. CEO Satya Nadella is currently in India and spoke at a conference in New Delhi yesterday, reiterating the company's commitment to the country and its AI ambitions. He praised India's tech stack and shared more on Microsoft's India investment strategy. Take a listen.
We're building out Azure as the world's computer. In fact, right here in India, we're thrilled about sort of all the data center capacity that is coming live. We already have stuff in Pune and in Chennai and Mumbai. And we're very excited of the India South Central, which is in Hyderabad, that's going to come up next year. And so this is going to be the next big data center region for us, which is going to be scaled very rapidly.
CNBC TV 18's Ashmit Kumar filed this report on the recent slew of AI-linked investments into India coming from global tech giants.
Well, all signs clearly pointing towards the Indian market, the Indian geography, at least as far as Google, Microsoft and Amazon are concerned. The three big players, the three big hyperscalers, now increasingly looking at opportunities out of India. And to encash those opportunities, we understand heavy investments being committed to the Indian market over the space of the next 5 years. This entire journey began with Microsoft committing to $3 billion in the month of January. Now, they've increased that figure several-fold. That investment now stands at over $17.5 billion, which when combined with the $3 billion adds up to over $20 billion. That's the commitment that Microsoft made, Satya Nadella made as he met with the Indian Prime Minister. Not just that, bear in mind that just a couple of months back, we had also seen Google making a commitment towards data center capacity, setting that up here in India with a commitment of $15 billion. And the latest announcement, the latest throw of the dice has been by Amazon committing to $35 billion here again to the Indian market. Amazon has made it clear that they want their investments to be spread out across e-commerce. They want their investments across AI, across skilling as well. Also pointing out that as far as the AI infrastructure that they're looking to set up, that of course will play out over a period of 5 years. So clearly a big investment push coming in by three major players. The collective investment, the commitments that we're seeing that are likely to play out over the course of the next 5 years will be north of $70 billion, and that's just in between these three players. Now, that has sparked a big wave of excitement, especially within government policy circles. We're yet to see more color, more perspective on how these funds are likely to be distributed, where exactly these funds are likely to be headed. But with India's strong push, with India seeking and to play host to a lot of large companies, especially with respect to building its data center and AI capacity, this is being seen as a welcome move by the big companies, by big tech, planning for their investments in India.
CNBC also spoke to the Secretary of India's Ministry of Electronics and IT, S. Krishnan, about these big investments, and here's what he had to say.
These data centers are not meant just for India, but they're meant to be used across the world. So to some extent, the availability of renewable power in India and the size of the grid enables this to happen. because ultimately with AI and data centers, what you are aiming for and what you're chasing after is where is adequate power available. The land is a secondary requirement they'll figure out, and India is a large country, there will be land. Initial clustering took place where the cable landing stations were. Mumbai and Chennai were the two places where there was a lot of clustering. Now it is spreading out more to where the demand for services are: Bangalore, Hyderabad, Noida, those are around Delhi. So those are the places where it's spreading to. Eventually, I believe it'll go closer to where the power itself is. So I think that's the direction in which it's moving.
And it wasn't just AI that we discussed with S. Krishnan. Our conversation ranged around India's semiconductor ambitions, the global capability and data center boom in the country, and much more. We'll get you more from this exclusive chat later on in the program, and also get an expert analysis insight of this from India's AI ambitions from IDC APAC. But coming up, we will continue to track the latest in the Indigo saga as the air carrier cuts its guidance for the third quarter. We're back in about 2 minutes. You're watching Inside India. Welcome back to Inside India. The crisis at Indigo continues, with the air carrier cutting its revenue forecast for the current quarter. CNBC's travel and transport reporter Monica Petrelli has the details. So we're getting at least a first indication of how bad this is going to hit Indigo's bottom line. Of course, talking about the massive and severe outages that they had just the other week. What are the numbers telling us, and what are the forecasts perhaps telling us based on their expectations, Monica?
Well, after we saw regulators cutting 10% of the winter schedule, now Indigo is saying that it's revising forecasts down. First, in terms of capacity. Now, capacity still on pace to grow, not in the high teens as it once was. Now, we're looking more about the high single digits to early double digit territory. Also, passenger unit revenue. This was expected to be flat or to see a slight growth. Now, this is expected to drop somewhere in the mid-single digit territory. Now, ICRA saying that it expects near-term financials for Indigo to be significantly impacted. We do see shares dropping, closing yesterday some 3%. Overall, though, since this mass cancellation crisis began last week, Indigo shares dropping around 14%. That said, we will be watching the market today to see reactions to Board of Director Chairman Vikram Singh Mehta, who said that the company will be turning to outside expertise to understand the root causes of the crisis that it has endured over the last 8 to 9 days now. He also said that some of the criticism that the company has received, and there has been a lot, he said is fair. However, some isn't. He specifically taking umbrage with a couple of issues. He said allegations that the company engineered this crisis, or that it was attempting to influence government policy, or that at any time put its passengers' safety at risk. He called all of these incorrect. He also said that the very much discussed pilot fatigue rules, he said Indigo at all times has complied with those back for the first round that began back in July, also the new ones that set in November 1st of this year.
So, with the Indigo cutting capacity and with their woes, it does create an opportunity for some of their rivals perhaps get market share. Is that going to be simple, though, Monica? Are the rivals actually benefiting perhaps from Indigo's woes, for lack of a better term?
Well, it does. This entire incident has really put Indigo in the spotlight. It has had a really very good record. So the fact that it had such a huge market share for a country with such a big domestic flying capacity, and also the growth that's set to come on board, it's hard to really make inroads with the 65% market share. However, we do see companies like SpiceJet trying to do that. SpiceJet saying it will ramp up as much as 100 flights per day for the winter schedule. So it seems like SpiceJet is looking to take advantage here a little bit. But what my first thought upon hearing that was, where are the planes coming from? Well, I looked into this. SpiceJet has been on a long-term move to increase its fleet. So it's doing so both with damp leases, also ungrounding of planes. We do see SpiceJet saying it got 2 Boeing 737s this week. So it can make a little bit of inroads. But we see Air India, though, dealing with its own compliance issues. Air India reporting itself to regulators just recently, saying that it found that one of its Airbus flew 8 times last month. That's without the proper safety compliance certificates that it needed. And this is something that Air India has since called regrettable. So, yeah, overall, it's been a tough month and a half for Indian aviation.
Yeah, and Air India is going to be another deep discussion that we'll probably have to save for another time, because there's a lot more to deal with that separate story. Monica Petrelli, thank you for joining us and bringing us the latest with regards to Indigo and their recent trials and tribulations. Coming up, we'll get you our full exclusive chat with the top bureaucrat of India's electronics and IT ministry and discuss the country's own AI ambitions. Stay with us. We're back in a few minutes. Welcome back, and we are counting down to the market open in India. And let's take a final look at what GIFT Nifty futures are foreshadowing for the Thursday open today, and still again foreshadowing perhaps gains today. 25,915 is the implied or foreshadowed open, that is, for GIFT for the Nifty 50 in today's session, about 160 points above where they closed on Wednesday. The Indian rupee, though, looking a bit softer despite that dollar weakness or the pullback from the dollar index. The rupee currently trading at about 89.95 against the US dollar, dangerously close again with that 90 of the greenback level that it tested and breached in recent weeks. This year, India has emerged as one of the hottest destinations for AI and data center investments. Global tech giants, including Microsoft and Amazon, have pledged to pour billions of dollars into the country. We explored India's own strategy in a wide-ranging, exclusive conversation with the Secretary of India's Ministry of Electronics and IT. Secretary S. Krishnan spoke to CNBC's Amitosh Singh about data centers, job creation, and regulations, and compared India's AI roadmap to the US and China's. Take a listen.
I think the important thing that you need to look at is that what will India's way forward be in AI compared to the way that either China or the US is looking at it. The big money initially went into AI compute in terms of the large data centers and the infrastructure which needed to be built out. It also went into building these trillion token models and trillion parameter models which were being built out. I think India's approach has been a little different and more studied. We believe our real opportunity lies more in actually developing applications which can then be used, because that's where the revenue ultimately will be. So I think India's ITES companies and STEM human resources would be geared towards building out these applications based on AI and then making sure that they are deployed. Because just having the model or compute is not enough. For any enterprise or anybody else to use AI effectively, they need these applications. The second part of it is that India's emphasis has been much more on how AI can be actually used and in which segments, the use cases, and in which segments of the economy or which segments of which sectors can it have the best impact. So whether it is manufacturing, whether it is agriculture, whether it is healthcare.
Answer the question then for us. You're asking the question. What is the answer to that?
No, the answer to that is that's our focus.
No, which sectors? Where will it go?
No, so these are the productive sectors of the economy. So these productive sectors of the economy, whether it is manufacturing, agriculture, healthcare, education, those are the focus areas where AI investments are going in for developing applications which can then enhance productivity.
Okay, talk to us a little bit about data centers. You know, GCCs has been the buzzword effectively in India. Will the government go ahead and give those assurances to the companies aiming to build those data centers? The question has been around guaranteeing land, electricity, water, and regulatory clearances, the single window clearances. What's your take on that?
You see, I think data centers would be treated as investments, and therefore we have a mechanism of the national single window and also state single windows which give most of the clearances. Many states have already started doing it, and we'll support it at the national level as well, because most of the clearances are actually at the state level.
Whether it is for Andhra Pradesh,
which is whether it is the land, whether it is a power supply, whether it is a building permission, all of those. So most of those fall within the realm of what the state governments need to do. The central government has some roles. I mean, there would be some telecommunication authorizations which would be needed to communicate between two of the data centers. If you're putting in a fresh cable landing station, then some clearances would be required as to where you land.
Intel CEO, Microsoft CEO, Amazon news, Google happened a couple of days ago. This just doesn't happen because the world has suddenly realized we've got to invest in India and they want to catch up to their investments in China or the US or anything like that, these big tech companies. This happens because there's a mobility push, there's a political movement, there is an industry-led movement. Can you tell us a little bit about that?
I think the important thing is that there are two or three factors which are important. I think one which we have been told by all of these companies is that these data centers are not meant just for India, but they're meant to be used across the world. So to some extent, the availability of renewable power in India and the size of the grid enables this to happen. because ultimately with AI and data centers, what you are aiming for and what you're chasing after is where is adequate power available. The land is a secondary requirement they'll figure out, and India is a large country, there will be land. Initial clustering took place where the cable landing stations were. Mumbai and Chennai were the two places where there was a lot of clustering. Now it is spreading out more to where the demand for services are. Bangalore, Hyderabad, Noida, those are around Delhi. So those are the places where it's spreading to. Eventually, I believe it'll go closer to where the power itself is. So I think that's the direction in which it's moving.
Okay. It's all about electrification, we understand. You're also seeing these developments, these investments, 35 billion, 15 billion, 17 billion, coming in 2 months before India is hosting the AI summit, which has been hosted by France, by UK, South Korea, and even in Africa. What should we be looking ahead to in Feb?
I think the main theme and what we are looking at is in the sort of catchphrase, we're calling it the AI Impact Summit. We started in UK in Bletchley Park in November 23. It was called the Safety Summit. So there was always this fear as to what AI will do. We moved to an innovation summit in Seoul, and we moved to an action summit in France. So now we finally come to look at impact, saying, what is it that, what difference will it make to people's lives? And I think, as I was saying, what would India's advantage be? Would be the use cases, how you deploy it, what difference it will make to people's lives, and that's what we would be looking at in our summit.
I'm going to talk to you about jobs, because Amazon is saying that they're going to create many jobs with this 35 billion investment. That's a huge challenge. That doesn't, to the normal person who has been hearing the headlines around how many jobs AI will take, this investment creating jobs is a bit of a confusing factor.
When I read the story, fundamentally what they're looking at is, because Amazon is a big platform which helps micro and small and medium enterprises across the country, and they sell products on it and so on. They are counting in the knock-on effects of making that kind of trade seamless, and therefore jobs which will get created in all their organizations which the platform helps. So yes, of course, that's broader economic activity, but from our perspective, we normally divide it into direct jobs and indirect jobs. Most of these would be indirect jobs, some would be construction jobs, some would be the other activity which grows around it.
Yeah, but we've seen that the major companies, the IT companies, have had layoffs. How is that a concern for the ministry?
I think we are, let's be honest. I think the way we look at AI and the way our conversations with many of the IT companies is that, they tell us that, look, every year we do send home some people. I mean, that's part of our normal churn. And we are also recruiting. Maybe the recruitment has slowed down a bit, but that is because we are finding the right talent for the newer kinds of jobs which are getting created.
And is that a challenge?
Well, I think they are trying to pivot to a place where they actually create AI applications and deploy them. So there would be different kinds of jobs from the kind of jobs that they had earlier. So there is a challenge in terms of reskilling and upskilling people, and they're working on that.
Minister Ashwini Vaishnav, your minister, he had an interview recently where he said that by 2031, 32, we will be equivalent to some of the major countries when it comes to India's semiconductor mission. And that's to build the industry to about, correct me if I'm wrong, 100 billion, 110 billion by 2030. And I also understand that's an intent, that's not necessarily a target. One of the primary challenges to do that is that we're not doing enough core chip design work, but mostly design validation work. And that such kind of rapid growth in the next 3-4 years, it really does depend on the supply chains that are unfortunately controlled by China. What's your take on that?
See, I think, look, no industry is without challenges. So I don't think that we should underplay the challenges. But at the same time, I think it's important to recognize that we were not a player in the semiconductor space at all till very recently. Now we are being taken seriously as a player in the semiconductor space. There are 10 units which are coming up and 2 or 3 more which maybe get cleared shortly. Then the Prime Minister has announced the next phase of the India Semiconductor Mission, which will focus a lot more on bringing in the ecosystem and everything else along with it. we are very deliberate in the strategy. We haven't, in the first instance, focused on, making cutting-edge chips in India. We're not saying we'll make 2 nanometer chips or 1 nanometer chips. We know that we have some way to get there. So we are focusing on legacy nodes where there's a sizable market already and where there's a requirement, and where I think we can learn the technology and start there, and then organically grow into more leading-edge nodes as we go along.
But do we have the time, sir? Because the question has been, momentum is the moat. The key is that at the end of the day, the US and the China and the others, they're just going so fast that to claim that we'll catch up in 5 years on semiconductors or we'll be a big player, it just seems unrealistic, or is it possible?
I honestly believe it's possible, simply because it is not unrealistic. I mean, we will be a significant player in the semiconductor space in about 5 to 10 years, but that's not the end of the race. I mean, most countries which are there got there over 30 or 40 years. And so it will take us a little longer to sort of get a leading space. But I think the globe has also changed. Geopolitics today has changed in such a way that you need alternate supply chains. You need the diversification of supply chains to actually take place, because that's what adds to resilience. So the space is getting created there.
Is India the hedge to AI, or is it where there's going to be money coming in?
I think India is not necessarily the hedge. India has a different approach and is situated in a different part of that market. We are where the applications will get developed. We are where the applications will start getting deployed from.
Sure.
And so that is another aspect of it altogether.
I want to ask one final question on regulations. It's a tough task to come up with AI regulations, that is acknowledged, but the likes of the EU have demonstrated it's possible. India's position has effectively been, paraphrasing, that it's such a fast developing technology that we can't do it just yet. We have guidelines which we have put out, and to some critics, to some analysts, that's not enough. There are concerns around AI. There are political ramifications through AI that we have seen play out in elections. So AI and its regulation is important. It's just that how do we do it, and is India going to find a way to do it when the likes of EU has said and shown that it can be done?
I think the important thing, there are many aspects to AI regulations. I think India's present position on AI regulation is there are at least 2 or 3 parts which can be handled under existing law. You talked about political issues, deep fakes, misrepresentation. Our existing IT Act has provisions to deal with it. We have sort of clarified some of those positions a little more effectively recently in order to enable us to deal with that better. So we believe that, and those are provisions of law which are not available in some other countries. We've had them from before. So to that extent, the existing law helps us to do that. Likewise, if you look at data privacy, our DPDP Act has now been notified and will come into force. That to some extent protects the way that data privacy issues will be addressed. Recently, yesterday in fact, or day before, on the copyright issue, a committee of the Ministry of Commerce and Industry has put out their report on what an approach could be, and they put out a working paper which we are discussing. So that all of these aspects are being looked at, and they're being dealt with under existing law. So our AI governance report, which was chaired by our principal scientific advisor, what it basically said is that you have existing laws under which you can deal with some aspects of this, and where needed, you can legislate if there's an urgency.
Isn't there an urgency?
We believe that we should not stifle innovation at this stage. We believe that this is not yet the time for regulation, and if there is a need to regulate, we will. And right now, I think it's still the time for innovation to actually take place.
The US has the Mag 7, not to mention OpenAI and Anthropic. China has the 6 little dragons. All of this got to do with AI. When does India get its AI-related big names?
I think you don't have to wait very long. Hopefully before the AI summit in February, we should have at least 1 or 2 big names coming out of India in terms of foundational models.
Well, a lot to tackle with regards to that very insightful and in-depth interview with Deepika Giri is the AVP and Head of AI Research at IDC Asia Pacific, to help us parse through a lot of the key takeaways in that very, very meaty interview that Amitabh Singh just conducted. Deepika, thank you for joining us. Again, there are many ways we can actually there are many things we can focus on here, but I'd like to talk about some of the ambitious goals and as part of India's own AI strategy, become more significant by 2030 in terms of artificial intelligence, and also becoming a semiconductor player in the global landscape. Do you share the same optimism that the Secretary Krishnan has outlined in that very, very in-depth interview that we just conducted?
Yeah, I think the India AI strategy is a fairly robust and holistic approach to kind of move India into the frontier areas of AI development. As we know, the AI value chain is fairly complex, right? You start from the infrastructure, the compute layer, follow it up with the data layer, the orchestration layer, and the application layer. Clearly, India doesn't have a head start in the infrastructure space, which is why there's so much focus on democratizing the infrastructure, and all these investments will aid in that direction. The next, of course, the area of focus has to be around data, building trustworthy data, curated data sets, both public and private, that can aid in this. Interestingly, the AI startup ecosystem is very vibrant in India, and with a very strong digital public infrastructure in India by way of Aadhaar and UPI, it's definitely giving the necessary push for AI to be democratized even more. Having said that, there are some gaps, right? I mean, I don't want to talk about the semiconductor. I think the former secretary talked about the limitations, right? We're still working on the mature nodes, right, where we don't have leading edge nodes. We are still in the phase of figuring that presence out. But having said that, I think the whole push towards AI adoption will translate into outcomes through these public initiatives, strong digital public leadership, investments and ecosystem partnerships within the nation. And also, I think the very important aspect of democratizing AI in India is also the national AI missions focus on creating social impact, right? He talked about agriculture, health, education. And these are the areas where you can really percolate society and create true impact. So I think it's a very holistic and robust approach to building AI capability in the country.
Yeah, and it's interesting you bring up some of those gaps, because as we've probably noticed, whenever people talk about AI, there's always the two leaders, China and the US, and the amount of talent that's fostered by China in terms of STEM graduates that they can throw at their AI sector is always brought up. But when you look at the amount of graduates they have, the only country that has the same amount or a similar amount is India. But then you have all these gaps, the fact that we don't have an AI company of the same prominence that China or India has as well, or the US has as well. I want to know, what are these gaps? Is there a need to address the infrastructure layer that you mentioned before India can realize that potential? Is India perhaps not punching at the weight they should be with regards to the AI race, and could they be further along than they actually are?
Let me try to answer that, right? So leaving infrastructure aside, there are many other layers and aspects to AI democratization. And one such area is data privacy and security as well, right? Privacy and trust in AI. And I think with this whole focus on building local capabilities, there is a lot of opportunity to optimize AI. And there's potential to optimize across the value chain, right? It's not necessarily about building the largest frontier models out there and competing with the big tech vendors, right? There is enough opportunity to localize AI. And moving ahead, the last 2 years, of course, has been a lot about agentic AI, generative AI, and all of that. But we realize the price performance can only happen, and the competitive differentiation can only happen if one is able to ground their own data into the model. And this grounding allows for innovation, differentiation in the marketplace. And so looking at it holistically, there is a lot of opportunity available to optimize these models. We heard DeepSeek earlier in the year coming out. So there are a lot of opportunities to optimize models, optimize performance, bridging the value gap when it comes to AI applications as well. So India could well focus on those areas. They can rely on their very rich talent pool that's locally available, maybe upskill them for generative AI and AI capabilities and hone them in the right direction to build a more robust, deep tech ecosystem, right, which is what is lacking today in India.
So you heard from the Secretary a while ago that he does think that perhaps in the next 2 years we might see some of these Indian AI champions, if I may paraphrase what he said. Do you think that is indeed possible, or perhaps is that too quick of a timeline to actually see an emergent Indian AI company of note?
No, not at all, because this year, the coming year is going to be a year of AI regionalization. And when I say that with a lot of conviction, which we've seen around data sovereignty and AI sovereignty itself, which means every country out there wants to have complete control over its data, its infrastructure, and its applications, right? And this need for control is only going to grow. So having said that, there is enough potential to regionalize AI within India. India is a very diverse ecosystem. There can be opportunities to vernacularize AI, to create local AI models. I don't think we're too far if we are able to, address all these challenges around, cross-skilling talent, keeping the vibrant ecosystem alive, right, by the right investments, the right incentives for these deep tech companies to thrive and grow.
Deepika, we're going to have to bring you back at some point in the future to talk about this robust AI ecosystem that we're seeing in India emerging at the moment. We'll have to save that for another conversation. Deepika Giri from IDC, APAC AVP, Head of AI Research. Thank you so much for joining us today and providing more context as to some with regards to that very deep interview you had with Secretary Krishnan as well.
Thank you.
Well, Indian markets have joined the trading day, and we'll take a closer look at how they're faring about 6 minutes of the open after a quick break. Back in about 2 minutes. And about 9 minutes since the opening bell rang out for Indian markets this Thursday, and we're seeing the Nifty 50 looking quite nifty, showing meager gains today and just flat to the upside at 25,779. But perhaps the component of the market to watch is the FX space, and that's the Indian rupee. Nope, you're not. You are seeing exactly what I'm seeing as well. The rupee now testing and breaching that 90 to the US dollar level once again. weakening, despite the fact that the dollar index itself softened on the back of the Federal Reserve's decision to cut or ease monetary policy. Despite that, the Indian rupee losing ground against that greenback at 90.05. And the question now is how low or how weak can the Indian rupee go, and if this might precipitate even more perhaps intervention to curb some of that volatility in the FX space we've seen in the fourth quarter of this year. Checking in now on how shares of Meesho are doing on their second day of trading, and you're seeing that it is giving back some of those strong gains it made the other day. Meesho shares opening in the red, down by about 0.1%, 169.66 rupees per share so far. And this comes the day after shares rose 54% higher than their issue price during their opening debut. Meesho's $604 million IPO drew nearly $28 billion in bids, making it one of the year's most sought-after tech listings. Its blockbuster debut follows successful listings by Grow and PhysicsWallah in what's shaping up to be another record year for India's IPO market. And shares of Interglobe Aviation, the operator of Indigo, also trending in the red, although not as bad as we've seen in recent days, still about 0.5% in the red, down to at 4,785 rupees apiece. The air carrier slashing its guidance for the third quarter. It is now expecting the revenue of its passenger unit to drop and the capacity growth to be muted as well. Indigo says it now sees Q3 capacity growing in high single to early double-digit percentages, down from the earlier forecast of growth in the high teens. Well, that's all the time we have today on Inside India, but do keep watching CNBC because Access Middle East is coming up next. Have a good morning.